Good afternoon, everyone. Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, September the 13th. Happy Wednesday, happy hump day, and happy CPI day. So we have been waiting and waiting and waiting on CPI. It was a big, it has been, it's come to the forefront of to be one of the biggest indicators probably this year. Only probably behind the Fed, because it's the inflation prediction index or data point basically. So consumer price index. So last month the CPI came in a little hotter than expected. This month came in again a little bit even hotter than expected, and showing inflation at a 14-month high. And the market just kind of shrugged it off. And I'm scratching my head. I'll show you right here. So it was at 8:30 this morning. That's when it was reported. And we initially flushed right down into our voodoo snow line there, but we came right back up. Then we chop, went up a little bit, flushed back down, came back up a little bit, and then we chopped all day. Then we flushed back down, then we came back up and kind of ended where we started on the day. Only being up 5 points on the day on the S&P. A little bizarre. And what's even more bizarre is, and I guess it's always like this, but I guess I'm like picking through with a fine-tooth comb on this particular one, and it didn't look good to me. It looked bearish and all that kind of stuff. But apparently, of course, I'm looking at other analysts and a lot of commentary on it. And a lot of people were saying it's bullish and this is great and everything's fine. And I don't get that really. But I guess I could kind of understand ultimately where we're going. We're getting closer to the end of the rate hike cycle, all that kind of stuff. But this was, it was a hotter number. That's never a good thing, right? So. What we're looking at now, so today's the 13th, what we're looking at now is, give me a second, let me get my drawing tool. So this is CPI today. Tomorrow is PPI, which is very important, maybe even a little more important this time than CPI for this particular month. We'll see. That's tomorrow morning before the open, but the biggie is next Wednesday on the 20th. That's the next Fed meeting. We'll hear what they have to say. Right now, the CME is pricing in a 97% chance of no rate hike. That's pretty, that's 97% chance it's not going to happen. That's pretty good, right? I don't want to bet against that. Obviously, if it was 60, or 55, yes, I might be interested. But 97% chance, probably not going to get a rate hike. Again, that the odds may change, could change dramatically tomorrow after PPI. Kind of don't think so. I do think the PPI will come in hot as well. But again, they're looking at core inflation and airline, fares have gone up, energy prices have gone up, and all that kind of stuff. So if you isolate things out, maybe you can make a case that it's really not that bad across the board. I don't know. We'll see. But what all that means is that, let me put this over here. This is the ES that we're looking at here. Let me go to a 1-year chart. And as you can see, right now we are trading right here. These are 34 EMAs. That's kind of the time frame I like to use. Some people use shorter, 821. Some people use 50 or 100, 200, depends on your time frames. I use the 34s or kind of work well, and they set up well with the trades I use and all that. So we're basically kind of back to the middle here, to the mean. If you compare these two average true ranges, that's kind of the mean. So what that suggests is that we're chopping right here. Probably, unless PPI is really far out of line, we'll probably have chop into Fed next week, and then even from that, who knows. But I'm thinking we get some downside, maybe back to this lower Darvis box down here. Let me clean this up a little bit. Maybe back down here on a hot PPI number, perhaps. After Fed, if the Fed does not do anything, and there's a 97% chance at this point that they won't, we probably start back up this way. Not in a straight line. I mean, it could be, right here. It took, we chopped a while before we kind of started working our way back up. Maybe we do this. Maybe we do this. I mean, who knows? We can't even make a really good judgment call on that until we see what happens with the Fed and all that. But what's interesting and worth noting on the market is that the market is so far forward-looking that the market is already anticipating rate cuts, and I read earlier in the year, and if you listen to any of the videos that I did, you heard me talk about it kind of jokingly. The market's already saying that we're going to get 2 rate cuts by the end of the year. This was not that many months ago, and I was like, you guys got to be kidding me. That ain't going to happen. And it's not so far, but that was a pretty easy thing to make an assumption about. Sure, it could happen, but a lot of things would have to get a lot better very, very, very quickly. Don't see that happening. I don't even see 1 rate hike by the end of the year, but the market is very forward looking. So the market is looking at 6-month, 9-month, 12-month time frame out. Yes, I can see that out 9 months from now, 12 months from now, whatever. Going into next year, we are definitely nearing the end of the rate hike cycle. But you've got to get through with that, and inflation has to kind of calm down first before you can even really have a serious conversation about starting to cut rates. And the Fed will use that on the other side to kind of spur the economy and get it going, all that kind of stuff, because we haven't seen the other side of, I think, where these higher rates are going to go and slow down the economy and all that kind of stuff. But again, that's, I'm kind of speculating out in the future, 6 to 9 months from now, 12 months from now. So for us in the trading world, when our time frames are so much, shorter, day trading or weekly or, 7 days or 14 or 21, 30, whatever we're trading, we're looking at charts, just trying to kind of figure out where we're going to go. And again, right now I've got a couple of, I think I've got 2 bearish positions on. I got 3 bearish positions and 2 bullish positions. So I'm kind of at different points in time, all from now until the end of the year, right? I think we probably go lower first and then ultimately go higher. I've got 2 bearish positions down here, 3 bearish positions down here, and then I've got 2 bullish positions up here later out in the year. So, we'll see. And that's on the ES or the SPX. As far as individual names, we could go out and say, oh, let's pick up some Apple. This has gotten whacked, right? Whack-a-mole. Do you want to buy some Apple down here? Probably be all right. Apple trades on the NASDAQ. Do we want to do that? I don't know. AMD doesn't look so good. Microsoft, again, kind of in the middle. The ones that are standing out, look at Google. Looks like a rock star. Never had a blip there, just continues to go up. Amazon looks fantastic. That's great. Do I want to buy it here? Probably not. But it's definitely on the radar for for pullback. So the bottom line, it's really hard to pick anything out there that just jumps out and looks fantastic to me until we get a little bit deeper into or a little bit closer to or done with the Fed. That would be ideal, to be done with the Fed and see what they're going to do, and then we go from there. And in the meantime, again, we trade the charts that are right in front of us, the short-term stuff, and that's all we can do at this point. So I'm doing a lot more sitting on my hands and waiting than I normally do, but that's what you got to do in this kind of market. So keep some powder dry. Again, we're looking at today's Wednesday, tomorrow's PPI, and the next Wednesday is the biggie, which is the Fed meeting on the 20th. So be on your toes for that. And I'll do an update next Wednesday, and we'll talk about what happened and where we are from there. And we'll have a lot more clarity by this time next week. So hope that helps. Hope it makes sense. Be careful in the next week or so, and use tight stops if you're trading. And I will update again next week. We'll see what the Fed has to say. We'll see what PPI has to say for us tomorrow, and then the Fed next week, and we'll go from there. So thanks for the time, and I'll talk to you guys soon. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me